A warm welcome back to Sit Down with Saxon. This is the next episode, and it's a follow-on episode from the one before where I talked about digital platforms and who's doing too much for too many people or trying to. And I got some great responses from that. So I want to share with you actually just one of the responses that I got that actually has sparked some really key interest. So this is now about how high a value can we go when it comes to high value items being, quote, bound on a digital platform. So is there a ceiling limit, or is there just an open limit on what we can do to effectively insure anything on a digital platform? Now this is one of the feedback messages that I got. Says, we are in the process of building a new version of our system. They are an insurer, and a couple of questions you raised were really interested. So can everything be digitized? Is it possible to build a quote and bind platform for a £10 million asset without human interaction? Maybe, maybe not. Could we trust a few brokers with that ability? Going on to say, trying to do too much for too many people, which was one of my points. Every broker wants something slightly different. Should we find the middle ground or reduce the amount of brokers that we work with? Both, maybe. Not doing enough for what the broker needs. Did we consider the broker enough when creating this new iteration of our system? Love your comment at the end about creating a digital platform. Why do it? Why would other brokers do it when they could use the one that we've developed, which is extremely advanced? Your ambition is amazing, blah, blah, blah. Right. So again, I've made notes for this episode and I've got a little presentation to show you, because the question about how high we go on a quote and bind digital platform with the value, the asset value, is determined by how the system is built and who's involved. So how much human interaction is there for assets that are get a bit higher? Maybe none, maybe some. Let's dive into it. So first off, I want to be clear what these podcasts are for. Now, naturally, this podcast is going out on the Saxon Insurance Brokers channel, and we are a direct-to-consumer insurance broker selling insurance to private clients. But I also want to use these platforms to educate other brokers about what is out there, what they should be doing, what they shouldn't be doing, and how to stay ahead of the curve like us, because even though they might be competition, it's good for us all to rally together to really work towards one common goal, which is just to move with the times and stay as digital as possible. And if we are building something or have built something that is really good for other brokers, then let's open it up to them, subject to insurers agreement and so on, obviously. So there's going to be a real mix of like insurtech and AI news on this channel for you and me, as in the brokers and us. And there's going to be some promotional kind of videos that will be simply towards customers who will be buying products from us digitally, or maybe through our high net worth route. So in episode 6, we addressed the markets, AI, insurtechs. The theme was that many insurtechs were trying to be too much to too many people, which was picked up on that feedback. And they're trying to be too much to all businesses across the insurance value chain, i.e. there are insurtechs trying to build one platform that will work with insurers, MGAs and brokers. But in my opinion, that simply doesn't work, because you just don't get niche enough into that specific sector that they're working in. And like I said a minute ago, we got some great feedback, and let's dive straight into, I've said that already, but we're going to keep diving into things. So the podcast, I'm recovering from this horrible cold that literally everyone has had over Christmas time. And hopefully this is the last day of it. I don't know if you've had it, but it's the 2nd of January. Happy New Year, everyone, by the way. And we're kicking off the new year in the office for sure. And yeah, everyone seems to have got ill, and today when we're all back in the office, we've got lovely blue skies. What a coincidence. Stop chemtrailing us. Anyway, I'm the founder of Saxon Insurance Brokers. It was established in 2017. We have built a very, very technical, in-depth quote and bind platform that we are rolling out for our products, and we will perhaps roll it out, or the plan is to roll it out to other brokers like you who also sell similar things to us. So stay tuned with how we can help your business grow as well, because we're in this together, right? And 2025, after that budget, is going to be one hell of a year. So you need to be ahead of everyone. Right, first off, thank you if you reached out to me from the last episode. Let's get into the first bit of the message, which was, can everything be digitalized? Is it possible to build a quote and bind platform for a £10 million asset without human interaction? The answer is yes. And the answer is yes, because systems are very clever, and systems have the ability to do things that humans can do. Sometimes better, sometimes not as good. But let's talk about what an underwriter does. An underwriter has a brain, and they have a system. And the system is the first port of call, so everything goes into the system. And then from the back of that, the underwriter gets notified, most likely, and they are then using their trained brain to overview that risk. And let's just take it through a few of our questions in our head about if it's right, if it's wrong, is it in appetite, is it too high, is it too low, are the claims too high, and so on. So when there's a system plus a human involved, but the human has the overarching decision on this, we call this, in the technology space, human in the loop. Now remember that phrase, because that is a driver for what we're delving into here. And basically nothing can happen without a human, from the submission phase all the way through to the releasing the quote, all the way through to going on cover and then paying and so on, which might be on broker account or whatever. But that human is involved, and that human must do something in order for the business to be done. So the opposite to human in the loop is, you guessed it, human on the loop. Imagine the human comes out of the loop and they sit above and they watch. And sometimes they won't need to do anything, because the loop will just continue going around as it's submission to quote to bind to payment and so on. That will just continue happening. Sometimes the human might have to drop into the loop to do something, but then they come out pretty quickly, and they're only in and out for seconds, let's say, or minutes. So there's a little bit of a insight into what I'm about to get into. So now I'm going to share with you a presentation that I've put together, which is human in the loop versus human on the loop. Now there's a little star here. This yellow star is geared around the points that I'm going to discuss with regards to high value assets, and what I think the yellow star is going to highlight, what this system, or what these features of the system do to help us underwrite really high value assets. So let's just quickly buzz through this, what we call the process stage, human in the loop, which is traditional broking, to human on the loop, which is the digital broking. And these are the differences in the two. So let's just buzz through these. Stay with me, because this is really, really important, and it's just shows how well systems can be built in order to effectively underwrite and effectively distribute. And there's another slide after this one that talks about which is the scalability and all the other things that are involved, which again is really interesting, and there's something quite comical in between then as well. So process stage, naturally the first step is there's customer interaction. So customer contacts the broker via phone, email, or in person for queries and quotes. The human on the loop version of that is the customer interacts with the digital portal for quotes, queries, and policy details. Yep, we've all seen that. That's pretty standard, especially in private motor insurance and so on. Data collection, the broker manually collects information from the customer through conversations, or forms, or the customer inputs data directly into a digital platform. The system validates it, and organizes the input automatically. Then the quote is generated, so the broker manually assesses the risk, consults with the underwriters, and requests the quotes from a panel of underwriters, which is usually by email, sending one email at a time to each of the panel of insurers to then get quotes back. Then the digital version of that is the platform uses algorithms to assess a risk and generates a real-time quote based on predefined underwriting rules. Yellow star, predefined underwriting rules and algorithms. Algorithms are really key when it comes to digital underwriting because you can train the system. Everyone knows what an LLM is. You are training it and you know what machine learning is. So with an LLM and ML, you are getting the outcome that you want, but only with human input generally at the beginning. So yellow star on quote generation. Broker reviews the quotes, negotiates with insurers, communicates options with the customer, or the broker monitors quotes flagged by the system for anomalies, escalations, or complex risks. That's where the human might drop into the loop. Underwriting, insurers underwrite manually. The insurer's underwriter manually evaluates the risk, adjusting terms and requesting more information if needed. Very labor intensive. We can train around that. The next line is broker review. The broker reviews the quotes, negotiates with insurers, and communicates options with the customer, or the broker monitors quotes flagged by the system for anomalies, escalations, or complex risks. Then we'll move to underwriting. The insurer's underwriters manually evaluate the risk, adjusting terms or requesting more information if needed. Automated underwriting processes assess the risk, referring only out of appetite cases or high risk items to a human underwriter. Yellow star, human drops in the loop. This is where the system can start to do its thing, plus a little bit of human intervention. Policy issuance, broker communicates approved policy details to the customer. Insurer processes and sends the policy documents manually. That's so boring doing that as well. Digital platform generates policy documents instantly and delivers them to the customer electronically, almost no work involved. Ongoing support, broker provides manual support for endorsements, claims and renewals. Customer uses a digital portal for most tasks. Human support is available only for complex cases or disputes. That's human in the loop versus human on the loop. Now, this is not rocket science, but what we're doing here is we look at the right-hand column of human on the loop, and we are just seeing where the system can do the things that we want it to do. And all of that can be trained. All of that are effectively algorithms. Now, you might have heard of algorithmic underwriting. This is exactly that. So going back to the question we had earlier, which was, can everything be digitalized and can it insure an asset up to 10 million? Well, of course it can, because we will tell the system what appetite we have and therefore what algorithms need to happen throughout the process. So is the person old enough or too young? Are they experienced enough or not? What are their claims like? Are they too many claims, too a higher value of claims? Where is the asset located? Do we need to load or not for wherever that asset might be? And so on. There are many, many variables for how we can underwrite a risk that is high value. Now, what you might do is you might start with a very thin and narrow appetite before broadening. As the book grows, you might say to yourself, well, I'm happy with what I've written for the last 6 months, and now I'm going to extend it to a little bit more. And in that time of the 6 months, you would have learned exactly what is right and what's wrong and what's referred and what's not. And from there, you can effectively work out how you broaden appetite, if you want to at all, or tighten appetite. You know, at the end of the day, if you're only writing good risks, hopefully you have fewer claims. Therefore, the performance of that book is much better than another book that might just be trying to cover everything. And that means that surely the rates will be more competitive because that book as a whole is running very lean or very profitably. Okay, This next slide is an interesting one because basically I told ChatGPT to make a graphic of the slide that we've just seen, and it said both sides are human in the loop, funnily enough, and it's really blurry and really terrible. So I think one of the other AI platforms might come up with something a little bit better than this. Perhaps Grok, because Grok is very image driven. I didn't try it, but I might do after this. And look at the in that human on the loop right hand side, like the words don't even make sense. So yeah, a little bit of work needed on the AI side of it. Right, let's just buzz through this next slide, and there's a few more parts on here that talks about like the efficiency, the scalability, customer experience, accuracy, and cost. Everyone's interested in cost, right? Because if underwriters' costs are lower because the digital platform is doing all the heavy lifting, then surely they can recognize that and give lower rates and perhaps higher commissions. So we'll get down to that in a second. Right, 4 yellow stars on here for what I think help underwrite higher value assets. Human in the loop on the left, human on the loop on the right, old versus new, let's say. Customer interaction, some of these will be a little bit of what we said before, but let's just buzz through. Customer contacts the broker via phone, email, or person, yep. Customer will interact with a digital self-service portal. Perfect, love self-service portals. Ours has a brilliant self-service portal. Why not allow customers to do all of their policy administration by themselves? Like, do it. Data collection, broker manually gathers the customer information, customer inputs directly into a platform. Yes, risk assessment, broker manually assesses risk, automated systems evaluate risk based on predefined rules and algorithms. That's a yellow star. Quote generation, quotes are generated manually by brokers, instant quotes on the system. Underwriting, human underwrites a risk. Automated underwriting handles most cases, escalating referral cases to humans. Let's say, for example, we talk about appetite and where you wanted to bring the appetite in to begin with before broadening it. Now that could be a £5 million asset, and you might have all the rules relating to a £5 million asset to begin with, and you refer cases that are over 5 million, or you refer cases that are over a certain number of claims or value of claims or the age of the person or experience. At least you're trapping the data. At least you are getting people into the funnel. So if they're in your system from your really good marketing, you've got a chance. Even if you are not quote and binding them and you referred 90% of the risk, but you had the data for those customers and you were able to help them in some shape or form, then happy days. Because you probably don't know every single person. In fact, you definitely don't know every single person that looks at your website. Now imagine if you got someone onto your website and every single person on your website gave you their data, whether that was to check their renewal for them in the future, whether that is starting the process or trying to get a quote from you for the quote and bind. So why don't we have data trapping forms all over our websites that try and get every single visitor into a funnel so that we as brokers can get hold of them to talk through something about their insurance? Well, we actually do. We have that everywhere. Most brokers don't. So that's another thing that we will be able to help other brokers with in the future. So watch this space. Automated underwriting handles in most cases escalating referrals to humans. Humans become or are on the loop, but they drop into the loop and then come out of the loop and sit above. Policy issuance, we know all about that. Human role, we know that. Efficiency, time consuming. Okay, these are the new ones. Efficiency, time consuming process, manual processes, and back and forth communication. Yes, as brokers, we all know what that's like. When you want to get a quote out to a customer, but underwriters are out of office, underwriter is not available that day, or there's a small underwriting team and some of them are busy and you can't get hold of them on the phone. We all know these problems with insurers. Sometimes, especially with the work from home, nature that we have nowadays, it's really difficult for us brokers to sometimes pin down an underwriter and get a response over the phone or by email quickly. On the flip side, highly efficient with most processes automated for speed and accuracy. Speed no waiting, accuracy. You know that that risk has been underwritten by a system within the algorithms that you're talking about and you have set, so that the chances of that customer being able to buy are really, really high. And if not, and if it's a referral, you've still got their data and you can do something for them, hopefully. Scalability. Come on, everyone. When you talk tech, you talk scalability, limited by the number of brokers and underwriters available. Okay, so human in the loop process is insurers over here, brokers over here. Are all insurers and all brokers connected? The answer is no. Yes, there may be a few, but there's gaps there. So what's the opposite to that? This system is easily scalable due to its automation. Human resources can focus on critical cases. Okay, so yes, not all brokers and insurers are connected, but does that matter so much on the digital side? Not necessarily for the insurers if they have a few really, really good brokers with some really good systems that mean that that business that they are getting has the highest chance to grow and scale as much as it can be with probably very little human interaction. Customer experience, depending on the broker's availability and responses times, high touch but slower. Again, touching on that a second ago, customer has to wait for 2 or 3 days sometimes for us to get a quote back, when it could be seamless, real-time responses for standard cases and human assistance when needed, when the human drops into the loop and pops out, but that sometimes can take minutes if you have a very, very good referral system like we have built. Accuracy, prone to human error on data entry. Yes, that could be customer or broker side. Now, actually, the number of submissions that we submit to insurers, where the insurer turns around and says, we might have seen this risk from someone else, and by the way, all the data is completely different. So hang on, what's going on? Different submissions from different brokers with missing information or more detailed information, which is generally what we get praised for. Risk assessment or communication. So data entry, risk assessment or accuracy. So the opposite to that, the modern way, is error due to automation with human oversight for flagged issues. Again, human dropping into the loop does what it needs to do, comes out the loop, the process continues. Scalable and can easily be looked at, is more accurate with high value assets because the process, we've trained it and told it what to do. Cost on the traditional way, higher cost due to significant human involvement at every stage. Yes, you need staff. Here's where AI comes into it. Is AI going to completely destroy the insurance market and take away all those jobs? Higher cost due to significant human involvement at every stage. Flip side, lower operating costs due to an automated routine process. Automating routine processes. So, yes, costs come down, efficiency goes up, scalability goes up. Isn't that music to everyone's ears? That's that for the slide. Let's just jump back to the script. So, £10 million asset, is it too high to insure on quote and bind? No, because the overriding thing here is that we have rules and logics. Rules and logics just work out what we can and can't underwrite on a system. And that is agreed by the underwriter and the broker in advance on what their niche appetite is at the beginning and how they might want to start wide and bring it in or start narrow and take it out. That's just, that's depends on what kind of setup you're happy with, because MGAs, I think they start wide and bring it in, and their rates start low and then go up, or they go out of business. Anyway, an MGA conversation for another day is probably worthwhile. Right, what else have I got on here? Just quickly, there are huge benefits to this kind of underwriting. It keeps your risk well within appetite, where you have the fewest losses, like I touched on a minute ago. Even if you have the right appetite to start, I've touched on that as well. But would an insurer allow higher parameters to all brokers? So this is where, going back to the message, is should all brokers get broad parameters, lower rates, or even the ability to have a quote and bind system? Probably not. Shouldn't let's start off with, most brokers do not have their own quote and bind system. So most underwriters are not going to turn around and say, you can have this, because they can't have it. So until they have that, they can't have this. So insurers and dynamic brokers like us will become the leaders with technology, whereas it might have been MGAs before, but not so much moving forward perhaps, where brokers can use systems like we've developed to get better at doing their job and put more business on that binding authority or with that insurer. So once they've got a system, maybe they can talk to them about it. But if they don't even have the system, then how can they trade digitally? So with AI, algorithmic underwriting, combined with a fully configurable system, you can't go wrong. Therefore, can everything be digitalized? Well, the answer to that is, it's not about digitalizing everything. It's about digitalizing the right things. So the right asset class, with the right brokers, with the right platforms, training the system in the right way so that everyone wins. Because ultimately, if a broker has a human on the loop system where they can drop in and come back out, taking it away from that traditional human in the loop system where it's always a person doing something, then that is digitalizing the right things with the right people. That wraps that up. Thank you very much for listening and being part of this podcast. I really hope you made it this far, because these are really key things that of what we have worked on for the last couple of years when building our system, to make sure that we understood all of this years ago. And every point that we went through just then is integrated into our system, and therefore we know that is a winning formula for getting this platform out in front of customers, getting them into the funnel. They're buying from us. You've got the lifetime value goes skyrocketing, and therefore you've got them for a long time. And once you've got a customer for one class of business, guess what? You can cross-sell and upsell. That's a wrap.